Hey, this is Laci, your Las Vegas gal, here with your amazing lender friend. You're my amazing lender friend, Amber Coleman. Hi, Amber.
Oh, hi, how are you? Hi,
Good.
guys.
Hi, guys. So today we're going to talk to you a little bit about a really cool program that's been kind of going around for the last I'd say several months, maybe the last year.
Yeah.
It's become kind of popular depending on the situation. So we'll talk about when this applies, but we're going to educate you a little bit on that. We're also going to give you an update on what's going on in the market, give you a rundown of sort of like the pricing changes, the inventory status, kind of
All
all
fun
the fun
stuff.
stuff. And then, of course, as always, we're going to be doing an end Q&A at the very end for you guys. So while you're watching, of course, please like us, share it, subscribe, do all the stuff that you're supposed to do. But most importantly, if you have questions about anything related to Vegas or real estate or lending or I don't know, just whatever life. We can do like a life oracle session. Drop
We
it
sh-
like it's hot. We should
we
do
should
life.
do an oracle
Life. We're
session.
gonna we're gonna tell you the future that has nothing to do with the real future. Drop it like it's hot in the comment box below and let us know. We'll definitely answer your questions live while we're on here. This is for you, so we want to make sure that you know that the time that we come on here live, this is all about you. We want to make sure we're serving your needs. So please let us know. And of course, I'm going to give a shameless plug. If you're thinking about moving to Las Vegas, you might be because you're watching this maybe. Please let me know by clicking the link in the description or the pinned comment. We would love to help you figure out the next step in your journey. I don't care if it's now, 10 years from now, or if you're not even sure, we want to talk to you today. What do you think, Amber?
I don't think that was shameless at all. I love that you
I'm,
say
I'm shameless as it is. So anyway, thank you to those of us who are already joining us. We're seeing a few people pop on already. But Amber, let's talk before we jump into this 2-1 buy down program,
Okay.
which is an awesome strategy we should be talking about. Let's talk
Yeah.
about what's going on in the market in your world.
The market is insanity right now.
Mhm.
Do you really want me to talk
I
about the
do want
market
you
in
to
my
talk about
world?
it. Talk about it's not for the faint of heart. Let's just say that. What's
It's
going on?
not for the faint of heart.
Yeah.
So, what's going on is, I mean, since the last Fed meeting,
Mhm.
it's been crazy talk.
Yeah.
And really what it is that there's like a bond sell-off and the bonds affect the interest rates in a big way.
Yeah. A lot of people don't
So,
realize that. Like when they say the interest rates are rising, the Fed is rising the interest rates, they're
mhm.
not directly rising, taking our interest rates up. They're doing
Yeah,
things that affect the rest of the interest
actually the
rates.
Feds, when they raise rates, it seems like it affects the market less
Right.
than when they don't.
Right.
Because what's happening right now, I went through yesterday and read the Fed minutes. It's so
Mm-hmm.
fun to read that. Like
I don't know what kind of reading
it's
you're
just an
doing.
exciting reading time, right? But they
That you
talk.
just showed your nerd, your
I
full
know.
nerd.
I should have my glasses on and everything.
It's so exciting. I thought you were being facetious. I would never sit and read the Fed meeting minutes, but this girl
It was
spends her
really exciting because I
Wednesday
want to
nights.
figure out what's happening. So they talk about a run off the balance sheet, right?
Yes. Yes.
So what that is they're buying less mortgage backed securities.
Yes.
And so that's what's causing our rates. I mean, there's a lot of things going on right now that's affecting interest rates, but
Yeah.
that's one of them.
Yeah,
That's
absolutely.
not being talked about a whole lot.
Absolutely. And I know that the rest of the stuff happening in the world, the sad things that are happening over in Israel, and
Yeah.
all those things are definitely affecting things in a big way as well. We try to be careful about talking about that stuff because A, we're not experts, and B, we don't want to
Yeah.
ever sound like we're profiting off of the
Yeah.
horrible, shameless things that are happening around the world. But all of that affects our
It
rates.
does.
All of it affects us. So it's good to be aware of it and good to kind of understand the trickle effect, which is kind of the bond market is what you were saying, right?
It affects the whole financial market because the stock market leads to the bond market,
Right.
leads to everything.
Right.
So I mean, they're all connected.
Yeah. So rates, we'll talk about rates for a second. Rates are changed by the second. So don't quote anything. I'm not even going to use
Yeah.
numbers right now, but rates are a big thing that kind of ebbs and flows as the days go by. A lot of people that have been reaching out to me to look to buying a home aren't really concerned about the rates. And a lot of I think that comes from a lot of the builders are offering a lot of really crazy incentives. And also the program we're talking about today, if you can negotiate it into your purchase and if it works, can actually help you avoid any concerns regarding the rates. So for those people who are educating themselves to watch our live streams, rates don't seem to matter because they know that there's always a program out there for them or a grant that might help them work towards them. And with less people on the market buying right now, it's actually a better opportunity for you to take advantage of all this stuff. So the rates don't really matter in some of those cases, right?
Yeah.
Rates matter in general, but in general, we've been able to see a lot of clients get some of these programs happening that we're going to talk about in a minute, also with grants and things like that. So they're taking advantage of, while everybody else is out waiting, they're taking advantage of this time to really, grab the loot and go. So it's kind of fun.
Love it.
So let's talk a little bit about the market. I'm going to put some stuff here on the screen for you just so you can be aware. September 2023 monthly housing market update. This comes directly
I love
from.
it when you pull these.
I like these. She loves the nerdy stuff, man.
I know.
She
I
loves
like when you show
numbers.
me the report.
Yeah. So every month we get it. We're always looking backwards, right? We can't predict the future, even though we do a pretty good job at it sometimes. But
We've done a really good job.
Yeah,
It makes me kind of nervous to
I
predict
know
more though.
anymore though, but
Because
our
we
crystal ball has been foggy, but
Mhm.
still pretty accurate over the last few years. But I definitely want to talk about what's happening in the market. Again, the most recent numbers we have. So we're still down, but we're down 49% year over year when it comes to what we had on the market last year versus this year. So that's a crazy, crazy number to kind of think about when it comes to inventory available to purchase. So there were only 4,066 homes available in September of 2023, which is 49.9% less than the year prior. That's crazy.
Dang,
That's
that is
crazy.
crazy.
So if you wonder why are the prices in Las Vegas kind of sticking and not really dipping and dropping, everybody's waiting for the crash. Everybody's waiting for the prices to fall. That's why. It's because there's not enough homes available for people to be duking it out. People are duking it out over the homes that are available. There's not enough homes available for there to be more option. And when there's not a lot of options, people are going for the ones they want and they're paying what they need to.
Well, and you got to remember too that like people are moving to Vegas from all kinds
Yeah.
of high tax
Yep.
places. So
Yep.
it's not like it's our market here fighting over houses.
Right.
It's people coming in from outside. Like I heard that in August we had 5,000 people
Yes.
move from California
Yep.
to Vegas.
Yeah.
So
At one point we had like 138 people per day or something that were
that's
moving here, and
crazy.
then it shrinks and grows.
Yeah.
But so a lot of people are looking at moving to Vegas, and they see that there's a lot of other benefits that come with this, right? So when it comes to John just asked, are these numbers just for Vegas? These are numbers just for Las Vegas. Yes, great question. And the surrounding metropolitan area, but not Reno or anything like that. This is just Las Vegas. But one thing to say is, so last year it looks like we are pretty flat with our median home price, which is okay. It's great, 450, not bad. I was a little nervous when it started getting towards the 500, so things have definitely settled a little bit. Median home price for new listings, though, so people who are still thinking they're wanting to get as much as they can out of that home they're selling, they're still listing it above that median price at 480, which is up just a little bit. So what we're still seeing, but what those numbers mean for you guys who might not be following along as well as I'd probably be doing the same thing actually, is people are listing it here, but then they're being able to negotiate it down to about here. That's the mark, or they're listing it high and then having to decrease it if it's one of those houses that's just not maybe upgraded or not perfect or not a turnkey solution. They're realizing that they're chopping themselves down on price. What we're going to talk about today is something that's going to help you help you be able to kind of go to a seller who might be ready to chop it down on the price and say, hey, wait, don't chop the price down. Let me do this instead. Let's be strategic about this and get a win-win for all of us.
Numbers.
So we're going to talk about that. And then just a quick touch on condos and townhouse units. We were down 44% year over year for units available. Again, the whole city has shrunk in terms of inventory because everybody was taking advantage of free money. So we're now, right now, effective availability as of last month was less than 2 months, which is crazy town, less than right at 2 months for houses. And our median home price is at 270. Again, you're seeing a smaller gap when it comes to the listing price and the price that actually it's sold for. So, and I think that largely that has to do with the fact that there's a lot more condos and opportunities out there to buy, a lot more competition than there are in the single family units. So it's keeping those prices pretty steady. So that's what's happening in my neck of the woods. How about you? So if you're wondering or want to ask specific questions about Las Vegas real estate or anything, just drop it like it's hot in the comment box below. We'll answer it throughout here. And then, of course, at the end, we're going to be able to answer one-to-one questions for you guys. But that's kind of what's happening in the market today. So you ready to talk buy down?
Let's talk buy down. Yeah.
All right. So the 2-1 buy down program, I'm going to let this expert over here talk about it. But let me just say, from a real estate perspective, this is a thing that we have to kind of understand and be aware of before you go out and start shopping for a home, because this is going to really tell you how much you can shop for and what we have to ask for up front when we're negotiating on your behalf. Take it away.
Yeah, because, okay, so what the 2-1 buy down is, like, let's say we're looking at the going rate today, and we're going to show you some examples, but just to kind of explain it, we're going to look at the going rate today, and the 2-1 buy down is the seller paying dollar for dollar to get your rate down for the first year and the second year.
Yeah.
So 2-1 means that the first year is going to be 2% lower than what the going rate is for the first year.
Which is a huge savings. Yeah.
Huge. We're going to show you the savings in a minute. And then the second year is going to be 1% lower than the going rate. And then the third year will be the going rate. And every year after that will be the same. So it's not an arm, because some people get confused thinking, well, I don't want an arm. This is not an arm. This is the seller paying to incentivize you to buy their house to be able to get their interest rate down.
Yeah.
So what, so like this week I had somebody that wanted to go into it. So we were running numbers for this client. They were buying a condo, right? And they were like, look, I know that things like they believe that things were going to change within the next 2 years. So they specifically asked for the 2-1 buy down to be able to give them the cheapest payment they could possibly get in the next 2 years, hoping that in 2 years from that point, they're going to be able to refinance.
Yeah. So it's 2-1 buy down is essentially the 2 years, 1 year buy down. They're buying down the second year, the first year and the second year, and they're buying it down for you. It's a 2%, 1% buy down, right?
Yep.
So the way we go about this when it comes to working with buyers who are moving here from anywhere, or even if you already live in Vegas, is a lot of people come and they say, well, because the rates are so much higher or whatever the rate's at currently, I can only qualify for 350,000. Cool. How about we look at the 2-1 buy down program and just see what you could qualify for if you were to go through that. So if you did the 2-1 buy down program, you may be able to actually have a little bit more buying power. Am I right on that?
Well, you still have to qualify at the
higher rate, right?
Yeah, so you're still qualifying the higher rate, but sometimes people are like, this is where I'm comfortable at. So it might be able to give you more buying power because of the savings in the first 2 years, it might be able to make your comfort zone a little bit better.
From a payment perspective.
Yeah.
The payment is what's really making people so nervous, right? It's one thing if it's, I don't just make it up, 7% on the total of the loan, and I don't have to pay it till the end or until I sell it. That's one thing. But no, that obviously that interest is paid every single month when it comes to your home payments. So interest rates being higher obviously is taking your payments higher. So what this really does is it gives you a break for the first 2 years of, oh my God, I can just take a break. The seller prepaid that difference for me. So for the first 2 years, my payments are going to be this much lower and this much lower. And by year 3, the gamble with this is we're hoping that the rates have equalized or come down so that you could refinance and get whatever the prevailing rate is. If not, though, you'll know in advance, well, I'll know after that 2 years, at least I know that I'll be going for whatever that rate is. So it just really forces you to kind of be a little bit more strategic. The way we go about this with sellers, though, is, if we know that you want, I'll say $10,000 towards your buy down, we'll make up the numbers. We're going to talk real numbers in a minute. We go to the seller up front. We look at a house that maybe it's been sitting for a little while, because some of the houses that are going like that, they're not going to give you a 2-1 buy down. There's no reason to negotiate when they have 7 people in line. But if you've got a buyer who's had a house that's been on the market for a little while, or it needs some upgrades, or it's just not quite, 100%, you're going to have to put in floors or whatever. This is an awesome program because we can go to that seller and say, hey, seller, we've got an amazing buyer. They're willing to pay you what you're asking, which is the price point that you have it listed at, as long as you're willing to give them back this much money at closing, which means they're then agreeing to, instead of lowering the price, which then affects the whole neighborhood and the whole city value, right? It brings down the price points for everybody else who wants to sell. They're doing their neighbors a favor by keeping the price point where it was listed, which hopefully is within reasonable range of what it's worth, right? Has to appraise too, but you pay them what they're asking. They're buying down your rate. So you're getting the benefit of all of that. And then what's great is you're saving money on those savings, but your house is still, as long as it appraises, is still at value with all the rest of the neighborhood. So you're not kind of it doesn't look like you bought a discount, but you got a discount. Does that make sense?
Yeah.
Sellers think, I guess I just have to lower the price when I'm not getting bites or people aren't walking through my home. So we're using this to educate sellers. You don't need to chop down your price point, again, as long as it's priced according to the actual comps in the area. What we are telling them is, hey, if you were going to lower it 10,000, don't lower the price 10,000. Leave it at what it's at, and then give that 10,000 back to my buyer and let them use that money for what they want. So it's a really, really powerful negotiating tool if they don't have any buyers on the front porch looking to come in.
Yeah. And I mean, we're just always trying to help you see different strategies to make it work.
Absolutely.
Because right now, like, okay, what can we do here? What can we do there? So there's a lot of different ways.
Yeah. We can make it work. Yeah. And a lot of the builders are sort of doing this on, I don't know if they're still doing, some of the builders are doing this on your behalf to incentivize you to buy their homes, right? So it's like, oh, if you come in, we'll buy your rate down to this percentage. You have to qualify, and it's kind of a hot mess in the process. But if you're one of those who gets to take advantage of that, they're doing this on behalf of themselves. They know what a rate buy down looks like versus just trying to lower the prices of the homes. And they're also doing that so they can protect the value of the other homes that are in the neighborhood. So it's a win-win across the board. A lot of sellers just aren't educated about it. So we're hoping that if you're a seller, think about this when you're strategizing how you're going to price your home and also how you're going to reduce it if you don't get enough traffic. But if you're a buyer, come in knowing, if you work with Amber, knowing, okay, Amber already told me if I want that buy down, here's how much money I have to ask for in advance. Then we work together to really go out and find the sellers that are willing to work with you on this program. It's really cool.
Yeah, I've seen many buyers that are just nervous, right, about the payments. And this is what pulls them off, is to do a 2-1 buy down. So it's just a different strategy to look at. But we can look at how much savings you get.
Yeah. So let's pull this up. Let's look at this. So walk me through this, Amber. So we just give an example of an FHA loan, and here's some of the information.
And what we're doing here, because we're giving the average rate today of 7.625. Keep in mind, rates change daily. They're up and down depending on the markets, but we're looking at an FHA loan, 3.5% down, 350,000 purchase price. And then there's requirements to FHA. You have to have a 620 or above. And then
for that type of
for this program, other FHA programs,
you can go down to 540.
Yeah,
right.
You can go down to 540, but it depends on your down payment and stuff like that. So for the scenario that we're running right now, 620 or above FICO score and the debt ratio below 55%. So for the first year, when you're looking at monthly savings, when we look at the 7.625 rate is the going rate, right? First year, you're going to get 5.625 because we're doing a 2-1 buy down.
That's the 2% that they're purchasing your rate down, right?
The monthly savings on that is $454.39 per month.
So your payment is going to be $454 less than what it would be if I didn't have this program.
Yeah.
For the first year.
So total savings in that first year is $5,452.68 for the first year. That's dollar for dollar paid for by the seller, because remember, just like Laci was saying, we're asking the seller to be able to give the concessions to be able to get your rate down to a more affordable payment.
Wow.
For the first 2 years.
So this is just year one. So let's go to year two. Same scenario, $350,000 purchase price. You've got all the requirements to meet the program and you're putting 3.5% down. So year one, you're saving $450-ish on your payment each month. Year two is this, right?
Year two, you're saving $232.04 per month. So after the whole year is over, then you're at $2,784 and some change on that.
Right.
So so because you're saving so much and you're not paying it, and it's required that it's not paid for by the buyer. So the seller does have to pay for this. So again, you have to find a house that the seller's willing to pay for this, but the savings that you're going to get is huge.
Yeah.
And I've seen it pull so many people off the fence right now, because things look scary right now.
Well, and let's look at the total, because I put yearly, but it's actually total. I didn't mean to put yearly above that. That's a typo, but total program's estimated savings is $8,200. So here's how this works. When we go to find a home, let's say we find a $350,000 home that you love, you meet all the other requirements that we're talking about. We're going to go to the seller and say, hey, seller, we know you've been on the market for 70 days and nobody's coming to look at this house. We really want to buy it. My buyer wants to buy it. So don't reduce the price point. The price is exactly where it is. We've checked it. We know it's valued at what it's at. It's just not moving because it has bad floors or a bad backyard or who knows, right? It has something that needs to happen that someone's not buying this house. But we need you to give $8,500, just rounding it up. We need you to give $8,500 to my buyers at closing. And that $8,500 will be applied, or $8,200, whatever the number is, to purchasing that savings that we just walked through year one and year two. So it's stretched out over that first 2 years, which is awesome, but it's being paid at closing by the seller. So the seller doesn't have to reduce $10,000 like they thought to get a buyer. They're actually maybe even saving a little bit, but they're reducing their income from the sale, their net profits, by giving you that money that they were going to just take off of the top. So it's nil to them. It's the same money out no matter what. It's how they apply it, and how we apply it is what really matters. It's strategic. So this is paid by the seller at closing for the home. So when the home keys are handed to you, you get to save your first year's payments are $450 less than what you originally thought they were going to be. $5,000 for the year, right? And then the second year, they're $200 less. So your payment goes up a little bit, but you're still not at that full thing. And then the third year, or by the third, when it's year three, it's either you slide into regular rates, right?
Or refi.
Or you refinance.
If the rates are low. But you can refi any.
That's what my question was.
Here's the cool part about this. Okay. So let's say rates drop after the first year.
Yeah. Let's say you're saving $450 that first year. Again, all the scenario we just talked about. $450 that first year, and all of a sudden the rates drop like super duper low.
So every dime that seller paid to get that rate down, whatever you didn't use is refunded back to you.
Hey.
So you're not losing anything. Yeah. So like if the seller gives a concession to do a permanent rate buy down, the minute that you refinance, you lose what they gave you, right? Like that was just temporary for that time. But this one, because they had to pay dollar for dollar to the loan company, you get a refund back of what was not used. So if rates go down in the first year, that's refunded back to you. So that's one of the cool things about this program.
Yeah.
But I mean, it's like, let's say a seller also, let's say they just give you $8,500 to go towards to take the price off the house. The savings that you get off of dropping the price off the house, $8,500
does not help you.
is way less than $100 a month. So your savings over the first 2 years would be less than $2,400 a month. When this saves you, what did we put on there?
$8,400. Yeah.
So
it's about strategy, honestly.
Mhm.
So I know this is a lot of math and a lot of numbers and whatever, but the point of this really is to let you know that there are programs out there that you don't have to wait for someone to incentivize you with the program or with the price. You can come armed and ready to go with, well, if I buy a house at 350, I'm comfortable with that payment. And since I'll make 300. If I buy a house at $300,000, I'm comfortable with what that payment is. If I can get a deal or if I can get discounts, great. But if I can't, whatever. But if I want to reach and go to the 350 mark, I desperately need to make sure that I'm comfortable with that payment for the first couple of years. And the only way I can do that is with this 2-1 buy down. So we know walking in the door what you need to ask for, and it makes it a lot more of a targeted approach. It also makes it easier with the process of buying. The other thing too is a lot of times people, get really hung up on the price. I want to get a deal. I want to get a deal. I mean, I even had somebody just a few minutes ago, I did a phone call with who wants to buy a house in Vegas. And I said, so what's your timeline? He said, maybe next year, like beginning of 2025, because he's already assuming it's next year.
It's 2024 right now?
Early 2025. And I said, great. So great. We can talk now. That's no problem. He goes, but if I find a deal before then, I'm going to buy. What's a deal? What's a deal to you? Here's what I'll tell you a deal is. Someone paying for my rate to be reduced while the world is in chaos right now and nobody knows up from down. And I'm sitting pretty in my house, sipping tea, enjoying whatever I need to do to live in the home that I'm either going to renovate or live in or whatever, and enjoy that. And then as soon as the world calms down a little bit or things start to shift or rates maybe dip down, I'm watching it like a hawk. And so is Amber on my behalf. And I'm going to reach out directly and go, hey, didn't that just drop below what my third year rate's going to be? Cool. Should I refinance? Let's do it. And so you have the ability to take advantage of this for 2 whole years, saving money up front on the dime of the seller and the opportunity to change it if need be so that you're not stuck.
It's a beautiful thing, right?
It's a beautiful program.
Yeah.
I wish that we had more inventory, because if we had more inventory, there'd probably be a little bit more of a buyer's market. It's not a buyer or a seller's market right now. It's kind of just stuck in the middle, and which is fair. And I enjoy that.
But then it depends on the house, right?
But
so it's all about the seller.
It's all about the seller. So what we need to do is determine with you, what kind of house are you looking for? Are you afraid of putting in, what could you use that $450 savings for that first year and apply that $5,000 first year savings towards putting in new floors that you hate, that you absolutely hate? Yes, you could. And this is how you do it.
Way cheap.
So you can really start to think about, okay, I love this one. It's perfect, but they're not budging. They're not giving any concessions, and it's going to be $350. But I really love this one too. This one's $345 or $349, but the floors suck and I don't have the money to put the floors in. What if we had them to do a 2-1 buy down? We let them know that the floors down the street are much better and you're just going to go buy that house, or they play ball with us and you can go in and put the exact floors you want and get this done because of this program. So there's a lot of ways around this and a lot of ways to look at it. At the end of the day, it's savings for you, and that's what matters. And it also gets you the ability to buy a home now while everyone else is sitting there just waiting on the fence, waiting to see what happens. The minute the majority come off the fence, all this stuff goes away. It's done. It's done.
Yeah.
And also so do the houses, by the way. So,
well, because we're already looking at short inventory. Yeah. So the minute that the rates dip, because when there's some negativity that happens in minority world that I like to look at a lot of time with the financials, right? When there's something uncertain that happens, people put money in bonds. When money goes in bonds, rates go down. So the minute rates go down, then all of a sudden we're looking at a surge of people, because there's 4 to 6 million people waiting to come off the fence to buy houses. So this gets you in a very pretty way without you having to pay for it.
If we had more inventory, I would say this would apply to a lot more homes. So that's why I wanted to say I wish we had more inventory, because that would give you a chance to actually pitch this to anybody we're buying a house from. Because we have limited inventory, it's gonna limit the number of homes we can actually successfully negotiate this program on, but it doesn't mean that we shouldn't try to get ready and be prepared for it, because there's a lot of homes, just like I said, people who don't want to replace the carpet, don't want to deal with the stuff that's minor, that could absolutely cosmetically be done very cheaply and easily, and you'd be happy. And so this gives us a chance to go find those sellers for you. Walk through the house, make sure it's a clean as a whistle otherwise, and just make sure that it's just cosmetic stuff. And then you have the ability to kind of use this to your advantage. So the ones that are going to really be applied to this are going to be the houses that have sat on the market for more than 60 to 70 days, the houses that are just maybe not as pretty as their neighbor down the street, the ones that are just slightly overpriced and they don't want to come down on price. So we have the ability to kind of negotiate both price and this. And that's kind of where it's at. When it comes to new homes, we have the ability to negotiate that as well, depending on what the new home builder's doing. But new home builders are going to stop those promotions very soon, I guarantee. So when they do, then it's time to start looking, okay, well then resale makes more sense. So let's do the buy down over here.
It's funny, the flip. It goes from new sales to resale. It flips all the time.
Yes. So anyway, so that's our program. This really does help you guys. If you're itching to buy, but you're bummed about the rates, this is an amazing, awesome program that we really would love to look at with you. If you're thinking about buying a house in Vegas, you're thinking about moving to Vegas, if you just want information on whether or not this place is a good place to come, please call me, text me, or you can click the link in the description below. We are here for you. I would love to set up a call. It will be me you speak to. And then if I like you, maybe I'll let you talk to my best friend here. But let's go over and talk to the comments. Look at the comments and see what we've got going on. We got John Harris says, hey, ladies, my ladies.
Hey, John.
Good to see you. Matt Smith says hello. Hi, Matt. Good to see you. John did ask earlier, are the numbers that we shared earlier just Vegas? Yes, they are. Clark County. John says the discount point is at closing, or what does that mean?
Well, it's not really a discount point. So it's a total amount. They don't really call it discount points. It's a buy down amount that they're going to pay. It's paid at closing, and then it has to be credited by the seller. So
this is another great question from John. So what are the pros and cons of a buy down? So we talked about the pros a little bit, right? The pros give you savings for the buyer. The pros give you savings for your monthly and annual savings off of your payment for the first 2 years. For the seller, the pros are they've got a buyer that's going to buy the house that might have been sitting for a while. And they didn't have to reduce the price possibly on the home and then negatively affect their surrounding neighbors and area and neighborhood. The cons, I would say, would be that we don't know what the future holds. So in 3 years, the crystal ball. So that's to me, I think the con. And the con for a seller is that they got to give up a little money, but that's it. So because we don't know can't guarantee or don't know what rates are going to be in year number 3, what is the rate that they get? Is it the prevailing rate at that time, or is it the prevailing rate now?
You're locking in today's rate.
Got it.
So that's the rates we were talking about. We were comparing it to
today,
the average rate that we're looking at today of 7.65. Again, they move all the time, or whatever. And we're looking at FHA. So you're locking in that rate today. And then for the first 2 years, you're getting a discount. But for the other 28 years, you're keeping the
rate from today
because it's a 30-year fixed rate. So
that's something we forgot to mention. I think that's really important.
That's where a lot of people get confused. They think that this is an ARM, but this isn't an ARM. So an adjustable rate mortgage is when you're locking it in for a couple of years and then it adjusts
to whatever it is,
and then it'll keep adjusting year to year. This is a fixed rate mortgage that gives a temporary buy down for the first 2 years.
That's awesome.
Paid for by the seller.
I love that. I forgot about that part. We should have mentioned that. So I think that's exciting. It's less scary if you're able to qualify for the payment that would be with today's rate. It's less scary and less of a con because you already know what that's going to be in 3 years. If the rates are lower than what the rates are today in 3 years or 2 years or even 1 year, you can reduce that and lock that in. You'll lose the 2-1 buy down, but they're going to refund that money to you directly that you never used up. But you'll at least have that lower rate and you'll be in a different situation.
Yeah, and if that happens, the rates move in a year.
It's win-win-win.
I have seen, like last year, they were saying this year rates are going to move down. So now this year they're saying next year at the end of the year. Next year we do have an election year.
So we'll see.
And
this
usually
is a good time to do this.
Yeah, usually a lot of times they try to keep things pretty around summertime and election years. So hopefully it follows that trend.
I think so. I love that. Mark Frieda. Hey, Mark. Good to see you. Thanks for joining us. I've been everywhere and there's no place like Vegas. Like them earrings, Laci. Classy. Thank you. Appreciate you.
You always have the best earrings.
I love me some earrings.
And there is no place like Vegas.
There's no place like my beautiful neon hometown. John's asking, what type of properties does this program apply to? Single family, condos, townhomes?
You can honestly do a 2-1 buy down on single family, townhouse, condos. You can even do them on fourplexes if you wanted to. Duplexes, duplexes. You can do these on conventional loans or FHA loans, or actually VA loans too. You can apply a 2-1 buy down.
I love that.
To any loan, and the final rate is no higher than the going rate.
What it is today.
That day, whatever rate you would have for the going rate, it's just the first 2 years you get it discounted, but it could be applied to any loan that you're doing.
I love it. John also said, so it's 2 years before the rate goes up to the regular permanent rate. Yes. And then what about that 3rd year rate? That 3rd year rate is whatever today's rate is, unless you've decided to refinance, right?
Yeah.
Awesome. Let's see here. Matt, we already did John's, what type of programs? How do we do similar subjects like where we take over the seller's interest rate? We definitely can talk about those assumable loans. Those are assumable loans. We should probably do a talk about assumable loans and the pros and cons, because while it sounds amazing, There's not as many of those happening either, because there's a lot of sellers who don't want to give up that awesome low rate that they have, knowing that they'd have to go buy at today's rates, right? And then beyond that, the process and the timing can be a little bit sticky.
Well, if you can get an assumable, it's beautiful. But remember, when they bought that house, they bought it in 2020, or before, and then refinanced in 2020, 2021. So what they owe on that loan is a lot less. So you're only assuming the loan that they have, but there's a difference because the house is worth a lot more.
Right.
So let's say they owe 200,000 and they have a 2% rate. Awesome. But there's 200,000 more because now they're selling it for 400,000, and that you have to come up with the difference.
Yeah. So a lot of people don't think about that. They think,
money out of pocket is the problem.
Yeah, I'll just get your rate, and then who's coming up with that big difference? That's
if you have a rich mom and dad that's going to give you the difference,
mattress money, leave it in the mattress, whatever. Yeah, so that's kind of how that works. But we definitely can talk more about assumable loans. I think we should definitely do that, because there's a lot of miscommunication about that.
I see a lot of clickbaity stuff on
that too. A
lot
of clickbaity. Salt Lake Snow Bunny says, hey, ladies, just listening and trying to learn something from you. Thank you, Snow Bunny. We love you. We appreciate you. All right, well, that's going to do it for today. We're super excited about, the fact that the 2-1 Buydown program is an available thing for anybody who wants to take a look at it. You've got to fit the criteria that we just talked about with some of the FHA stuff. But let's talk to Amber. Amber's a game plan guru, and that's going to be your news. She's a wizard of loans, game plan guru. She's also one of my best friends, which also helps. But she is one of the top 200 lenders in the nation for a reason. She knows how to be strategic. She knows how to help you think strategically, and she doesn't want to let an opportunity go by for you to be able to actually buy a home. So we are super excited to keep bringing you guys new programs each and every week. Maybe we'll talk about assumable loans in the next couple of weeks, but next week, actually, I'm going to tease it. We've got some new criteria and new guidelines that have come out for conventional loans, FHA loans. So we're going to talk through those, because they may actually give you a little bit more money in your pocket. So stay tuned for next week. We'll be live Wednesday or Thursday. We'll definitely try to promote it in advance. It always just depends on how many of you guys schedule calls with us as to when we actually go live. So thank you again for joining us, everybody. We certainly appreciate it. Share this, like, comment, subscribe, do all the things. But other than that, I'm just super stoked that I get to be back here with you.
I know. It's always good to see you.
It's a 2-1 Buydown. Hey, the 1-2 punch from yours truly and this one over here. We'll talk to you guys